Welcome back to the Patrick Lane Show, where we talk about personal finance, investing, and real estate. And today, another wild ride for GameStop. So do me a favor before we talk about it, smash the like button right out of the gate, hit the subscribe button, ring the notification bell. I really appreciate you hitting the like button and maybe even sharing the video to someone who you think might be interested, educated, or entertained. You know, yesterday we talked about how GameStop, by selling off and dropping 34%, was basically a crash and burn day for GameStop. But today, guess what? It bounced back just like we knew that it would. It got up off the mat. It rose like a phoenix from the ashes of the crash and burn yesterday. And it took off soaring to the moon today. And basically everything that it lost yesterday by dropping 34%, it made back up today, plus a little bit more. It was up about 53% by the end of the day. So that $60 that it lost yesterday, it made back today, which is great news. Now, is there a reason for that? Is there underlying technical analysis or fundamental analysis to indicate that it would have gone straight back up? Not really, although if you look at the 50-day moving average of the stock price, it essentially, when it dropped down from yesterday to the close of business yesterday and then opened this morning, it basically dropped down and bounced off of that 50-day moving average of the stock price and then went back up. So what does that mean? It means that the technical support for the price of a share of GameStop has basically gone up to about the $125 level, which is the 50-day average. So that's a great thing, right? It means that we're going to have the likelihood to stay above that is probably going to be pretty good. Now, another thing to keep in mind, though, is that the 200-day moving average is still way down at $39. And so, you know, if you're really into reading the technicals and taking into account all of these averages, you know, there's some people who would look and say, well, that is, you know, a sign that we may still drop down to that level. But frankly, I don't think that's going to happen. And in fact, I think more we move that 200-day average forward, the higher it's going to be. And if you think about even the 8-day average is up at 175. So even that we passed over today when it closed at 183. We've passed over that 8-day average, although we're not quite up to the 192 level for the 20-day average. So we still have a little bit of room there that it can bounce back and forth, up and down. But the fact of the matter is that today was a very, very good day for those of us who believe in GameStop and think that it's a good stock to hold. Now, yesterday was sort of a funny video because so many people came out and commented and talked and said that, you know, I was being a downer and I was a boomer because I said that it was a crash and burn day. But the fact of the matter is that GME is very volatile. It has days where it goes up, it has days where it goes down. And if we believe in the stock, we believe in the transformation that GME is going to make at Ryan Cohen's behest, and his leadership, then we're just going to have those days. It's going to happen. Now, obviously, there's some other things that could be at play in the background. We still have the issue with, you know, hedge funds and others trying to protect their investments, trying to cover their investments, and, you know, possibly shorting ETFs to make up for that. We talked about that a few weeks ago in a video where we talked about how ETFs can destroy shares in order to make sure that they cover their shorts. And so that's not something that we've forgotten about. That's still out there floating around. But there's also some DD on some of the forums that talks about how ETFs are still sort of hedges are still manipulating some of the way that they're placing orders in order to drive the price down so that they can cover at a cheaper price. But you know what that means for us? It means buy the dip, right? If you're not a paper hander, and that's what I was talking about in the video yesterday, is that it was only the paper handers who got out. If you had paper hands, you probably sold yesterday faster than you did anything else. But if you're a diamond hand, guess what? You probably bought that dip yesterday, right? And you're feeling pretty good today because it jumped back up 53%. So anytime the paper handlers and the hedge funds jump out and drive the price down, people who really believe in the stock are going to buy the dip. Now, of course, I'm not telling you to buy the dip. I'm not telling you to buy GameStop. I'm not telling you to sell GameStop. I'm not a financial professional. I'm not your financial advisor, that's for sure. I'm just some rando on YouTube. So don't listen to me. Go find somebody else to tell you what to do, or buy or do your own research so that you know the stocks that you want to buy. Buy the stocks you like. Buy the stocks you think are going to go up in value so that you are protecting you and your family's wealth over time. So today I think was a great day for GME. It's a great day for GME holders, and it's just amazing how this stock will bounce around. But keep in mind also something else important happened yesterday. So Jefferies, one of the analysts out there, and actually they've got some involvement with GameStop and possibly pricing or being involved with them selling future shares if they decide to do that. So take it with a grain of salt like we do everything else. But Jefferies analyst yesterday put out a report, and they bumped their price target for GameStop from $15 to $175, which is really good because it's right in that sweet spot where we've been, with the exception of yesterday and the drop, it's right in that sweet spot where we've been bouncing around for the last 20 days or so. And so that's a really good indicator that analysts now are paying attention. Now, what was that report, that increased price target based on? The fundamentals of the business, looking at the financials, the earnings that came out, and then analyzing those earnings and realizing that 30% of GameStop's current business revenue comes from e-commerce online sales, and that at that $1.5 billion value, that 30% is translated into $1.5 billion in revenue. And so if we believe that GameStop is going to convert to the digital e-commerce giant that we think it's going to, and that this analyst believes it's going to, she has no problem saying that it's going to get from 1.5 billion to 3 billion in revenue, and that with some cost savings measures that are going to reduce its cost and expenses, that prompted her to increase that price up to $175 per share, which is great, because if we think about the $175 as being the floor where the support is, then that only helps the stock to continue to rise and go to the moon like a lot of us want it to do. So that's it for today. Let me know down in the comments what you think happened yesterday with the crash and burn, today with the phoenix rising from the ashes. Do you think GameStop is just bouncing around and being its typical volatile self? Do you think that there's a technical or fundamental reason that it went down and then went back up today? And let me know what your strategy is. Are you paper handing? Are you diamond handing? Are you just buying the dip and holding on until we hit the moon? Let me know in the comments down below. Do me a favor before we leave, smash the like button, hit the subscribe button, ring the notification bell, and we'll see you on the next video.